welcome back to another video. In my previous video I have talked about journal entries, but in this video we will talk about how we post these journal entries within the journal ledger. So before going within the video, let's talk about the transaction that we have made in my previous video. The first transaction was that owner brought cash within the business, so that cash gets debited and the capital account gets credited. In the second transaction, we purchase goods with cash 20,000 rupees. So the goods being an inventory gets debited because whenever there is increase in asset, it will always be debited. And the cash account being asset gets credited because there is a fall in cash, and whenever there is fall in asset, it will be decreased, and whenever decrease in asset, it will be credited. So in the third transaction, the expense is increasing because we are purchasing some office supplies, and stationery expense and the office supplies are basically the same thing. One of my students asked about what is the basic difference between the office supplies. Like normally we mention it as office supplies, but we mention here as a stationery expense. So basically both these things are same almost. So the stationery expense is increasing. Whenever there is increase in expense, it will be debited. And the cash is decreasing, so whenever there is decrease in cash, cash is an asset, it will be credited. In my fourth transaction, we carry out sales. Here there is a different kind of transaction because three different accounts are involved. So basically there are sale based on cash and based on debts. 50% sale is on cash and the 50% of the sale is on debt. So here three accounts are involved. Let's move towards the fifth entry. Here we paid rent expense is increasing, so it will be debited, and the cash is getting deducted from my account, so the cash will be credited. Then in sixth transaction, we purchase some of the goods, and the goods we are purchasing is against a liability because we have to pay that person in future. We are not paying cash here, so the creditor Ali account gets credited because the liability is increasing. In the seventh transaction, we have talked about drawing expense. What is drawing expense basically? Whenever there is increase in the expenses, it will be debited. So here the drawings are that we are taking out cash for our personal use. That is what we call as drawing. And the cash is decreasing, it will be credited. In the eighth and the last transaction, we have talked about wages expense. Wages expense are basically we are paying wages to our laborers, so expense is increasing, it will be debited, and the cash is getting credited because the cash is deducting against the wages expenses. So here we talked about the entries. Now we will tell you how we post these journal entries within the journal ledger or the T accounts. So let us start today's video. Let us talk about the first transaction, how we will make the first transaction here. There is a cash account. Basically here we write the T account as a debit and the credit balance. If we talk about cash account, here we have to write as a format. So the cash account gets debited. So what is the reason behind getting debit is capital account. So what is the amount? 50,000 rupees. So the cash account gets debited with the amount 50,000 rupees because of the capital. Here we will clearly show you the effect of the first transaction here. Say the cash account gets debited due to capital with amount 50,000 rupees. Now let us talk about the second part of this transaction, as according to the double entry concept, every debit has a credit. So here we will show you the credit side of this entry. Here we mention capital account, debit balance, credit balance. The capital account gets credited because of cash with amount 50,000 rupees. So the cash account gets debited due to capital and the capital account gets credited due to cash. Here we will show you the clear picture of this account. The capital account gets credited with cash 50,000 rupees. So let us talk about the second transaction here. Here goods account. Here we have to write the name of account. Here always debit and this side credit. So the goods account gets debit because of cash with amount 20,000 rupees. Basically we are purchasing goods of 20,000 rupees with cash. Here we will show you the clear picture of this transaction. The goods account gets debited due to cash with amount 20,000 rupees. Now let us talk about the second portion of the same transaction. Here we go, debit, credit, and the cash account. The cash account gets credited due to goods with amount 20,000 rupees. Basically here we will show you the effect of transaction. The previous account, if we discuss about this account only shows the balance of this transaction, mean the transaction number 2. But here this transaction shows the balance of the accumulated balance of the cash account. Like the transaction that we have previously made, that was the balance of last transaction, and this is the balance of this transaction. So it is the overall balance, the summary of the cash account of the first and the second transaction. Now let us move towards the third transaction. We carry out expense, office supplies, or the stationery expense. We mentioned stationery expense as a short form. Here stationery expense gets debited with the cash of 2,000 rupees. The reason behind is the cash. Here is a clear picture, the cash account and the stationery account. Basically we mention in here the stationery account. The stationery account gets debited because the expense is increasing and the cash is reducing, so cash gets credited, but the stationery expense gets debited due to cash with amount 2,000 rupees. Here we show you the second effect of the same transaction number 3. This goes debit, here goes credit. There is a cash account. Cash account gets credited due to stationery expense with amount of 2,000 rupees. Basically whenever the account gets debited, this side, when this transaction is on the top, the cash comes on the right, on the left side, and whenever the stationery expense, the cash is here, so the second thing, because the cash is crediting, so the stationery expense comes on the right hand side. Again this account down here shows the only effect of this transaction, but now we're showing you the overall effect of this cash account. This was the first transaction, this was the second one, and this is reflecting the third transaction, which is at the top. So this is the accumulated balance of the cash account. The cash account gets credited due to stationery expense because we have paid cash and the cash is deducting. Whenever there is a reduce in cash, there is decrease in asset, and whenever there is a decrease in asset, it will be credited. Now let us talk about the fourth and the last transaction of today's lecture. But as you can see, there are 3 different accounts involved, so this will have a different effect. Here we talk debit, credit. Now we'll mention here debtor Hassan account. Whenever there is a debtor or the creditor, basically you have to write and mention their name. I've given you the short name here, but you have to write the full name of that debtor, because there may be 10, 20 or 30 debtor or the creditor in one business. So you have to create for each and every creditor or the debtor a separate account. Even a person is a debtor of you and the creditor at the same time, still you have to create a different account for both being a debtor and a creditor. So here the debtor Hassan gets debited because the debtor is increase in debt is basically debited, so which is because of sale with amount 20,000 rupees. Basically we will not look at this transaction, we will look at this amount here. So the debtor Hassan account gets debited with the sale of amount 20,000 rupees. Here we will see the clear picture of this transaction, debtor Hassan and the sales. Debtor Hassan account gets debited due to sales of 20,000 rupees. And now if we talk about the second account, Here as usual we'll write debtor and creditor, and we'll talk about cash here. Again, I'll clearly tell you that we will tell you the balance of only cash account here of the fourth transaction. So the cash account gets debited with the sale 20,000 rupees. We cannot write 40,000 here. This will definitely be wrong, because the only half of the sales are based on cash, and for half sales we will get paid in future from our debtor. So here we will show you the overall effect of the four transaction in the cash account. The capital account, that was the first, that was the second, then the third transaction, and now this is the fourth transaction with the amount 20,000 rupees. Now let's move towards the last transaction effect of today. Third portion is a sale. So now what is affecting sale here? Sale gets credited twice, one because of cash and second because of debtor hustle. Both amount 20,000. So the overall sales that we carry out is a 40,000, 20,000 because of cash and 20,000 because of debtor hustle. So the sales account gets credited with the cash 20,000 rupees, and the sale account gets credited because of the debtor hustle with amount 20,000 rupees. So both accumulated, if you combine, the sale is 40,000 rupees. In this video we have talked about just 4 transactions. In my next video we will talk about the further 4 transactions, and we'll show you how we can convert them within the general ledger, and then we will try to post it within the trial balance, and then we'll show their effect in the balance sheet as well as in the income statement. So hope you have liked my video. If you like my video, kindly subscribe to my channel and press the bell icon.